Hey everybody, my name's Angel. I'm a market analyst, business graduate, and I'm a co-founder here at Vaultline. And in the next few minutes, I'm actually going to show you exactly how Vaultline was built, the live performance, the risk protocols, and how it structurally differentiates from other algorithmic systems in this industry. So if you're a high-level, serious investor and you've been looking for more education on this cutting-edge technology, be sure to stick around. Hey everyone, welcome. I'm really glad you're here today. Before we jump into everything, I just want to say whether you've been investing for 30 years or you're still trying to figure out where to put your money, what I'm going to show you today is going to be relevant. So stay with me. Today, I'm going to show you how I use software to outperform today's markets. And over the next few minutes, I'm going to walk you through exactly what that means, not in a theoretical way, in a very real, very concrete way, with live numbers you can look at yourself. Here's what we're going to cover today. We're going to go through 6 things. First, I'm going to show you our live results, actual live real money performance you can verify independently. Second, I'll explain why algorithmic trading isn't just for hedge funds anymore and why it actually belongs in a modern portfolio. Third, I'm going to show you exactly how Vaultline is built, because understanding the structure is what separates this from everything else out there. Fourth, we'll talk about the risk management layer, which honestly is the thing that most people don't talk about enough in this space, and it's probably our biggest differentiator. Fifth, I'm going to be very transparent about who this is for and who it's not for. This isn't a fit for everyone, and I'd rather tell you that up front than waste your time. And sixth, I'll walk you through what it actually looks like to get started. But before we get into any of that, Vaultline is a software company. We're not a financial advisor. We're not an asset manager. We don't take custody of anyone's funds. We build and offer access to algorithmic trading software, and our users connect that software to their own brokerage accounts. What I'm going to show you today is real live performance, but past performance is not a guarantee of future results. Trading involves risks. You can take losses. The results you see today reflect the real accounts, but they don't guarantee you'll experience the same. So with that being said, let's move towards our first segment. Most people who come across algorithmic trading, they've either heard about it from a friend, seen it advertised online, or maybe they've already tried one and the experience was mixed, right? Here's why. The way most algorithmic trading products are built, you're essentially buying one strategy or maybe a handful, and you have to decide which one to run. Is this a trending market, a volatile market, a ranging market? Do I run a gold strategy today, Forex one, an indices strategy? That's a problem because nobody consistently knows what the market is going to do next, and making that call manually defeats the entire purpose of automation. The second problem is risk management. A lot of these systems, they have what's called an equity stop loss, which sounds sophisticated, but in practice, it can cut your account in half overnight before it even triggers. That's a retail level protection. It's better than nothing, but it's not what institutional traders use. And the third problem is what happens when one strategy goes through a bad patch. You're stuck. You either hold and hope or you manually switch to something else and try to time it right. Either way, you're making emotional decisions about an automated system, which makes it not automated. Those 3 points are exactly what Vaultline was built to solve, and I'll show you how in a minute. But first, let me show you what the output looks like. Okay, so everything I'm about to show you is live. This data is from a real account traded in a verified brokerage account in real market conditions. You can verify all of this independently through a third-party platform called MyFXBook. And for those on the call today, you'll be receiving this case study via email, where you can then click this MyFX link and perform your own due diligence. So as we look at this system's historical performance in 2025, the system ran every single month. Here's what the monthly returns look like. January through June, consistent returns between 3.9% and 6.1% per month. July, 10.59%, single best month in 2025. August came close at 9.93%. For the full year, no red months on the annual record. Now, let me put that in perspective. The S&P 500 averages about 11% a year. This group of subsystems in 1 year did multiples of that in monthly increments, and the whole time the stock market was doing its own thing, completely unrelated. Now let's look at year-to-date 2026. We're only a few months in, but the numbers are looking strong. January coming in at 6.07%, February at 2.84%, March 15.51%, and April 3.5% currently. That 15.51% in March, I want to be clear, that wasn't just a lucky trade. That was the entire system operating across 9 strategies, coordinated, executing hundreds of trades across multiple asset classes. It was the system doing exactly what it was designed to do. And most importantly, February was 2.84%. That's a relatively modest month. And that's okay because this isn't a get rich quick product. It's a consistent compounding system. And when you compound even modest monthly returns over a year, the math becomes very compelling. Now, let me explain why the system can do this because the results are the output. What I really want you to understand is the architecture underneath them. Here's the core idea behind Vaultline. And once you understand this, everything else will click. Think about traditional investment portfolio. You don't put all your money in one stock. You diversify across sectors, asset classes, geographies, because different things perform well in different conditions. No single investment wins all the time, but a well constructed portfolio is designed to perform across all conditions. Most algorithmic trading products don't work that way. You buy one algorithm or maybe a few, and you have to manually allocate between them. That's not a portfolio, that's closer to playing slots at a casino, if you ask me. Vaultline is built like a portfolio of algorithms, multiple strategies, each designed for a different market condition, all running together inside one master account simultaneously, automatically. When one part of the system is operating in its ideal conditions, it can be more aggressive. When conditions aren't ideal for a particular strategy, the system's risk layer pauses it and other strategies pick up the load. You never have to make that call because the system makes it for you. Compare that to the traditional model, one algorithm, manual decisions, retail grade risk management, which is proving to be an outdated model. So let me show you what actually is inside the system. Vaultline currently runs 9 independent algorithms right now, all operating simultaneously inside one master account. Each algorithm is purpose-built for a specific market and a specific type of market behavior. Those 9 algorithms are organized into 3 subsystems, and all 3 of them are coordinated by an AI-powered layer. We call it the coordination layer that monitors everything at the account level, not just the trade level. The first subsystem is called Vanta. It trades indices, specifically the NASDAQ. It uses machine learning to process complex market signals and execute with precision in trending equities markets. The second is Artemis. This one trades commodities and metals such as gold, silver, and oil. These are volatile assets, and this system is built for exactly that. Cross-market machine learning, fluid execution, designed to capture outsized moves in commodities and metals markets. The third is Strata, which trades major currency pairs across Euro, CAD, AUD, NZD, and GBP. It's an AI-driven quantitative model focused on stability and capital efficiency across shifting currency conditions. Now, here's what makes this powerful. At any given moment, different things are happening in different markets. The dollar is strong, gold is volatile, NASDAQ is consolidating. Each of those conditions favor different subsystems, and Vaultline is running all of them all the time, coordinated. No other retail algorithmic trading product I'm aware of is structured this way. This is how institutional trading desks are actually built, and now it's available to individual investors like yourselves. Okay, this is the section I get most excited about because it's the thing that most people in this space simply don't talk enough about. Ask yourselves this: when you think about risk management and trading, what comes to mind? A stop loss, right? You set a level, and if the trade goes against you far enough, it closes. That's a per trade protection. That's fine for individual trades, but it does nothing to protect you at the portfolio level. If 10 strategies are all running simultaneously, or you're running grid and they all have a bad hour, a per trade stop doesn't protect your account. It just closes 10 bad trades. Vaultline manages risk at the account level, and it does it through 3 engines that are running constantly in the background. The first is EEM, Equity and Exposure Monitors. This is the system that continuously watches your total account equity and your total exposure across all running strategies. If it detects the market conditions are outside the execution criteria for a particular algorithm, it pauses that algorithm, not the trade, the whole algorithm, before a bad trade is even taken. Think about what that means. It's proactive, not reactive. It's not waiting for a loss to occur and then cutting it. It's saying these conditions aren't right for this strategy, let's wait. Or it's saying other algorithms are already having exposure, let's wait till those strategies exit the market. The second is ASL, Adaptive Stop Limits. Unlike a fixed stop loss that sits at a static price level, ASL adjusts dynamically based on what volatility is doing in real time. As conditions change, the exit levels change with them. This means your gains are protected as the market moves in your favor, and your downside is limited with much more precision than a standard stop can offer. And last but not least, TOP, time out periods. This one is simple but really powerful. After certain conditions are triggered, unusual volatility, abnormal spread widening, specific pattern thresholds, the system temporarily pauses trading, not forever, just long enough to let the environment stabilize. It knows when to sit on its hands. Together, EEM, ASL, and TOP create something that most retail traders never had access to: a coordinated, intelligent risk layer that's watching the whole account in real time, 24 hours a day, 5 days a week. That is institutional grade risk management, and it comes built into the system. Now, I want to take a second and talk about the bigger picture. If you look at any serious investment portfolio, whether it's a family office, an endowment, a pension fund, they all have what's called uncorrelated exposure. That means a part of their portfolio is doing something completely different from the rest of it. Why? Because when everything in your portfolio is correlated, when it all goes up and down together, you're not actually diversified. You just have a lot of different bets going in the same direction. Algorithmic trading, specifically the kind of market neutral, multi strategy approach Vaultline uses, is one of the only asset classes that can genuinely be uncorrelated to stocks, bonds, real estate, and crypto simultaneously. What that means in practice, if the stock market drops 30% next year, your vault line allocation isn't necessarily dropping with it. It runs its own strategies based on its own signals in its own market conditions. Now, the software also removes a tremendous amount of friction from the equation. Instead of spending hours analyzing charts, reading reports, trying to time entries, the system does all of that automatically, continuously, without emotion. I want to share one reference that puts all of this in context, and you've probably heard it before. Jim Simmons ran a fund called the Medallion Fund. It's widely considered the most successful hedge fund in history. From 1988 to 2018, 30 years, it averaged 66% annual returns. Their best single year was 152% during the dot-com crash. During the 2008 financial crisis, consistently positive. How? Not because they had better information, not because they were smarter than everyone else. It was because they were systematic, algorithmic, and market neutral. They didn't care whether markets were going up or down. They found patterns and captured them automatically at scale. That's the model, that's the approach. And while we're not claiming to replicate the Medallion Fund, the architecture and the philosophy are the same: systematic, automated, uncorrelated. So, what does this actually look like for you as a user? Step one would be you open a brokerage account. We'll inform you of the specific brokers we work with, specifically because they're regulated, established, and integrate directly with our software. You fund that account and it never leaves your control. Step two would be you access the Vaultline software. Our team walks you through connecting it to your brokerage account. This is guided. You don't need any technical background. It's not complicated at all, and it usually takes about 30 minutes to onboard. Step three, the system goes live. From that point, all 9 strategies start running simultaneously. EEM, ASL, and TOP are active from day one. You don't need to do anything, and any future strategies and risk protocols we integrate will automatically be connected to your account. Step four, you monitor through the dashboard. You can see everything: your growth curve, your drawdown, your win rate, your total profit. It's completely transparent, and you can cross-reference all of it against third-party verification through MyFX Book. And if you're asking yourself what the time commitment from your end looks like, most users understand trading and investing and only check performance weekly, if that. Most observe with a wider lens and check in monthly simply because they understand performance is not calculated on a few weeks of trading. The system is designed to run without you using our risk management systems. You can deposit more funds at any time, you can withdraw at any time, you can turn the system off at any time. We have no lockup periods, no custody, no hidden mechanics. I want to be really direct here because I think it's important. This is built for investors who typically already have a portfolio or a good understanding of investing: stocks, retirement accounts, real estate, something. You're not starting from scratch. You understand that investing takes time. You're looking for a new allocation that behaves differently from everything else you own. You need at least $15,000 to $25,000 to invest in this for this to make sense for you. Why? Because the system requires a certain amount of capital to operate effectively across multiple strategies and asset classes. Below that threshold, the diversification doesn't work the way it's designed to. You need to be a long-term thinker. If you're going to check your account every 5 minutes and panic if one day is red, this isn't for you. The system is designed to be evaluated monthly, quarterly, annually, not daily. This is for you if you want something that's genuinely hands off. You have a career, you have a life, you don't want to become a full-time trader. You want your capital working for you while you focus on everything else. And if you want real risk management, not a retail stop loss that cuts your positions in half, actual intelligent account level protection, that was previously only available to institutional players. If that's you, then I think you're going to be very excited about what I'm about to tell you. So, before we talk about next steps, I want to address the thing that's probably in the back of your mind. How do I know this actually works? And how do I know I won't put money in and it just doesn't perform? We offer a 30-day money back guarantee. The requirements are simple: onboard within 30 days, run it for at least 30 days, and within that time period, if no net profit was generated, we'll refund every dollar you paid for the software. The reason we can offer that is because we're confident in the system. The performance data is live, it's third party verified, and we want you to experience it for yourself before you make any major capital commitment. All right, so here's how this works if you want to move forward. The first step is you'll apply. It's a short form, takes about 15 seconds. We ask a few basic questions about your investment background, not to gatekeep, but to make sure we're starting the right conversation. Step two, someone from our team will reach out within 24 to 48 hours to schedule a one-on-one demo call. This is where you'll see the live accounts in real time, ask whatever questions you have, and get a full walkthrough of the system. Step three, you attend that call. Come with your questions. Our job on that call is to show you everything, answer everything, and let you decide. And step four, if it's a fit, we help you get set up, opening the brokerage account, connecting the software, going through the onboarding process. Everything is guided. But please be aware there are a limited number of spots available in each onboarding cycle. We want to give each new user the attention they deserve during setup. So if you're serious, don't wait. And I just want to leave you with this. The way most people invest hasn't changed much in decades. You buy stocks, you hope they go up, you watch the news and try not to panic when they don't. And through it all, you're still correlated to everything else. When the market drops, your portfolio drops. Algorithmic trading done properly is a different game entirely. It's not about predicting markets. It's about having a systematic, disciplined, risk-managed approach that runs 24 hours a day without emotion, without fatigue, and without the noise of the news cycle. Vaultline was built to bring that approach to individual investors. 9 strategies, 4 asset classes, AI-driven risk management, one unified system. If that's something you want to be a part of, we'd love to have you. Thank you for being here today.